Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So this morning we came into that big gap up that was the result of news that Larry Summers has backed out of the running for the next Fed chairmanship. I was a little bit surprised about the market's reaction. Not that it was positive, just about how positive the reaction was to the fact that Summers was stepping out of the race. I think people have labeled him a little bit more of a hawk than I think is actually the reality. I think the difference between he and Janet Yellen from a policy standpoint wasn't necessarily as big as the market made it out to be based on today's gap up. But then today during the session, after that huge gap up to new all-time highs in the spiders, you got weak action for most of the day. We faded after that big gap up, which was what could be expected if you thought that it was an overreaction. So we can go ahead and take a look at the chart of the spiders, give you a visual of that. Like I said, we had that gap up to new highs in the spiders and a fade. Not a ton of power to the downside. It's not like we saw heavy selling, but it's definitely not bullish type action that you want to see after a gap up like that, as we just sort of faded lower for most of the day. You go back, take a look at the daily chart now. What we'll have to contend with is how much of this gap gets filled. So we'll be watching, basically today's low. If we were able to open higher tomorrow, if we open lower tomorrow, it's very possible we could fill that gap just within 2 days, especially as that Fed meeting, the much anticipated September Fed rate decision meeting starts. There'll be speculation about potential tapering. I think the consensus right now is that the Fed might start tapering, but it might be a little bit smaller than people might have first anticipated. So that's the type of thing we'll be looking for, and it'll be very interesting to see how the market reacts to it. Because today, for example, the market was reacting to the idea that Janet Yellen seems to be the shoe-in now to be the next Federal Reserve chair, and that she's very dovish, and that QE could go on indefinitely until the job market and the economy hits certain levels. So that's what the market was reacting to today. If we do get some tapering, and if tapering is even more aggressive than maybe the whisper number is right now, then it'll be interesting to see how the market takes that, whether we do get any harsh downside type selling, if they take the needle away, take the punch bowl, the heroin, whatever you want to say. But from a stock specific perspective, you saw a number of very important stocks or high profile stocks in the market that have been strong recently act very weak today. Apple has been weak, it's one example, been weak for about a week now after that lame product announcement they came out with, that people weren't too excited about the new upgrade for the 5S, and they weren't really excited about the new line of phones with the 5C. They perceived the 5C as being not a great phone, and it priced them out of having that phone be something that would appeal to the cheaper demographic, like in China specifically. If you take a look at the chart of Apple, big time weakness today, as initial signs appear to be that there isn't much demand for especially the 5C. We traded all the way down here to the 100-day moving average on Apple, and this chart is broken now, you could say, after breaking this pivot. The next level of support we'll be watching will be this gap all the way down here. The start of the gap first, which is about 434, 16 points from where we closed today. There's nothing really in the way unless we do continue to hold that 100-day moving average. And then we'd have to see if this gap would hold here. The low of that was 418.71. So not a pretty looking chart now for Apple after breaking down after the product announcement and then breaking down out of that island. I was one of the people who I thought maybe the sell-off was a little bit overdone after that Apple product announcement, but seems to be demand is not there for their products the way it used to be, and so it's something you have to take note of. But I do think there's a lot of value still in Apple stock. The growth rate isn't quite what it used to be, but in terms of the amount of money they are still able to produce, I think it's still a valuable name that's crossing over into the value threshold a little bit more than the growth threshold right now. So if you're a short-term active trader looking for momentum, you can trade this with some two-way action, but from a longer-term perspective, I think more value players will step into it now, and it's definitely off the table as a growth stock. But Facebook is another one that had a tough day today. Some people are saying that it's suffering from Twitter envy after Twitter announced its IPO last week, filed the initial paperwork for its IPO. Facebook has been very weak. Maybe some institutions are making room in their portfolios to own Twitter and unloading some of their Facebook maybe after some gains since buying it down as it was for most of the time after its public life prior to this recent earnings report that has really changed the composure in Facebook. And now what you have to draw is your trend line here from the earnings gap up. We have a clear trend in place since that earnings report. We talked about the strength after the gap up. Once that gap up held and we accelerated from there, I told you that Facebook had really changed composure and was ready for more upside. Today was one of the harshest, it was the harshest sell-off day for Facebook since that earnings gap up. So it's definitely something to take note of. We're now below the 8-day moving average. The 8-day moving average is now curling down after 3 days of the downside, and the 21-day is starting to curl down a little bit as well. So the next level to watch will be that 21-day moving average, which sort of coincides with this pivot breakout here. Levels around 42, 42.30. So something to watch there. Just interesting to note some weakness in Facebook as well as another big name like Apple. But right now, the market seems a little bit stretched. You know, we went from being down about 5% off highs to back at all-time highs once again, a lot quicker than anybody ever imagined. And it's not really built on a whole lot. It's built on the fact that, yeah, this Fed chair that everybody thought was the front runner to get the nomination isn't going to be in the running anymore. That's not really too much to hang your hat on if you're the market, and today's price action would indicate that. So it's sort of tough to chase highs right now. Tough to chase highs in the market because we got that sort of a breakout failure after the gap up today, I guess you could call it. But there's some more lower level type patterns that we've had our eye on as ones that are holding up pretty well and look like they could play a little bit of catch up while some of the leaders rest. And one of those names that we've been talking about a little bit, if you've been on the virtual trading floor, you've seen Scott talk about it. It was mentioned off the charts as well as ExxonMobil. This is a very high market cap stock to move. It's a behemoth to move, but technically it does look like it's improving with a little bit of a rounded bottom. You've seen just a series of higher lows form here over the last month or so in Exxon. And breaking above this pivot right here would be constructive. Today it had a little bit of a, you wouldn't call it necessarily a breakout failure, but a breakout failure out of this lower level range. But if it is able to break above this pivot, then there's not really much in the way of resistance up till you get here around the $91 area. So just want to keep an eye on a little different flavor than some of the trade ideas that we've been talking about recently. Another one's Expedia, EXPE. It's one that gapped down, and you don't like to see stocks gap down and then trade lower, but it's formed a base. And you know, basically what you do with these types of bases is you look for a break either down through the pivot lows or a break higher through the pivot highs. And if it does break higher above the pivot highs, it can maybe reverse composure a little bit. And things are definitely improving right now for Expedia. As you can see, the 8 and 21-day moving averages are now curling up, supporting the price of the stock after it got some time to digest some of these recent losses. And it's breaking above these pivots here today. It was able to be green during the session as well after the gap up, which shows a little bit of relative strength to the market. So this is one that could enter that gap, and if it does, the obvious first support would be here around the $54, $55 area. So want to keep an eye on another lower level pattern that could start making some moves. There was some news today in the agricultural names, specifically in the potash space. There was that whole thing with the Russian cartel breaking up and potentially driving down potash prices. But there was some news today that that whole situation could change a little bit. CF is not a direct potash name. It actually held up better than those other potash names when that news came out. And for that reason, I like it because there's going to be less volatility. You can share in some of the upside from some of the ag names, but you're not going to get the direct correlation to that whole potash fiasco. If you take a look at the chart, this is one that the growth story for CF has always been very compelling to me with all these agricultural fertilizer type names, with world population increasing, the affluence of that population increasing. People are wealthier, they eat higher up on the food chain. That means you need more corn and more stuff like that to feed the cattle, to eat the meat. That's just a cliff notes of that story, but you look technically at the chart again, you can see CF had that big jump when Dan Loeb, the well-known hedge fund investor, announced that in his quarterly investment letter that he had built a big stake in CF. It retraced a lot of that move, tried to get back up there, came back down again to about the middle of that bar, but then it's back on the move again today with that news. Like I said, it's back breaking above some pivots. If it can break above this pivot here, that's around 203.44 is the high exactly. 202.77 is the high of that Dan Loeb bar. I think it can get some more momentum. And you zoom out a little bit. Like I said, long term, this is one where I really like the story. Maybe these fertilizer names got a little bit overcooked in 2012, but it's one that I expect to get back to highs at some point. I like the group. I'm liking the chart more, another rounded type bottom with some higher lows in place, so definitely want to keep an eye on CF. And one thing to note today was strength in the financials. We've seen tech lead the market over the past couple months consistently, but over the last week or so, we've seen tech actually lag a little bit, which could be a sign that there's going to be a little bit more rotation out of higher risk type names into a little bit more safe names. And there's two ETFs that would lend credence to that. The financials do have a little bit of beta, but they're not as high beta as most of tech. But you talk about the financials and also the consumer staples today. First, we'll take a look at the chart of the XLF. You saw, obviously, the market gapped up big, faded from that gap, and left you with a kind of a bearish taste in your mouth. Go back to the daily chart of the XLF. The market left you with a little bit of a bearish taste in your mouth today based on the gap and fade. But the XLF was actually able to hold most of its gains, and it had a gap up that it held last week as well. And then today it held its gap up. So it's actually seeing its composure improve a little bit. You saw several names in the group act pretty well to separate themselves also. Goldman Sachs, they got added to the Dow, replaced Bank of America. You take a look at the chart of Goldman Sachs compared to the chart of Bank of America, and that tells the story maybe, the fact that one of them got added to the Dow, the other one got removed. Goldman Sachs showing a little bit more relative strength right now, sort of similar to the XLF chart, gapped up, held, gapped up again, has its sights set on highs. You go out to the weekly chart here, you can see more clearly that upper level base. We have noted a little bit of relative weakness at times for the XLF over the past few months, but in reality, you take a look, it's still got a nice uptrend going, and Goldman Sachs looks like it has its sights set on new highs. Take a look at Morgan Stanley. We'll go back to the daily chart to start with that one too. Morgan Stanley even stronger than Goldman Sachs. It's not one of my favorite banks, over a longer period of time, but more recently the technicals have been very good with Morgan Stanley. The price action has been very bullish, and it's leading the way with the group right now. So just something to note there. If you're looking for short-term relative strength, you're finding it in Morgan Stanley. Citigroup, a little bit weaker during the session after the gap up, and not quite as strong as those two charts. Wells Fargo is the other one I wanted to show you. Wells Fargo is one that, a little bit lower beta. The company takes a little bit less risk than some of these other banks. I do like it long term. It's a Warren Buffett favorite stock as well. Fits more of that profile. Doesn't move quite as fast as the others, but one that gapped up today, showed relative strength by also pushing higher during the session. So just something to take note of, maybe a more attractive price if you want to get a financial in your portfolio. And the XLP, just something I'll point out. I just thought it was interesting to note the strength in the XLP, the strength we've seen over the last few weeks overall in the XLP, the Consumer Staples ETF. Big gap up today, held that gap after initially pushing higher, getting close to filling this gap down from August 15th. So just interesting to see some strength return there. Could be signs that people aren't so sure that the Fed is going to taper and taper with any significance with this rate decision this month. But you did see some weak performance also during the session from things like utilities, things like gold. Take a look at the chart of gold, in fact. So we are getting, once again, mixed signals about what the market expectations are for this rate decision and about potential QE tapering. Many expected gold to be up big today with the markets on the fact that Summers, who's considered the hawk candidate, was considered the hawkish candidate for Federal Reserve chair. People were expecting maybe that he's out of the race. The dove, Janet Yellen, is the front runner now, maybe for gold to be strong. But as you can see on the chart, gold opened about flat, or actually opened negative, and continued lower during the session. So not much looks like it's going to rescue gold right now. Maybe if the Fed surprises everyone and doesn't taper at all, obviously gold would probably get a boost from that. Maybe a minuscule taper, maybe that could have a positive effect on gold, as maybe a larger taper might be priced into GLD right now, but be something very interesting to watch. The last thing on that front is bonds today. The TLT opened higher as yields were lower, but then it engulfed 3 days of price action, just about 2 days, I guess, of price action with today's down bar during the session. So it tells you again, we're getting some mixed signals about whether they think the Fed might taper or not. Today would suggest that yes, people are expecting the taper, but the question is going to be a matter of size, I think. So we'll pay more attention to the whisper numbers regarding that potential QE tapering over the next day and a half, and then we'll have that rate decision, and that'll be probably a big driver for the market in the short term. If it's smaller than expected, you think the market might bounce a little bit, even though we are at highs. But if the Fed does come through with a tapering schedule, a decent-sized taper, I think it could spook the market a little bit. That's now a little bit stretched to the upside based on today's gap up. But, it's one thing to be all in one direction and be wrong. That's not what this environment recently has been telling you to do. The environment recently, what we've been talking about a ton on Off the Charts, is be cautious. The market's a little bit in no man's land. If you missed out on today's big gap up because of a headline that nobody really saw coming about Summers, congratulations, but there's no reason to have heavy short on the brain either. So I think caution reigns right now when you have headlines. I know Syria's out of the way. You have Fed potential QE tapering. That whole September elephant in the room is going to be out of the way, hopefully, and we'll get a little bit more clarity from the Fed on that schedule. But in general, right now, it's sort of hard to lean too aggressively in either direction because, like you saw today, we get these big gaps and then we fade. We don't get a lot of power during the session. That's not the type of environment traders like to see in terms of being able to get volatility that they can trade, but also in terms of being able to gauge more long-term composure for the market. Some sort of confusing, interesting things going on right now. The market has come a long way in 2013. Feels like it wants to go higher, but it's hard to justify that when you talk about QE getting tapered and the economy showing very little signs of improvement with some weak economic data. So not everything's adding up, but not everything's added up for a while now in terms of the economy and the stock market. But we'll do the best we can to keep highlighting individual names and not focusing so much on the indices and the macro price action. But this has been John Darsie here for your daily recap. Scott and Brittany will be back here tomorrow morning.